Markets bounce back after 3 straight days of losses. Sensex crosses 71,700 while the Nifty stands firm about 21,600. Broader markets outperform benchmarks. The sea of green across the sectors with big moves seen in metals and financials. And IndusInd Bank is the sole loser on the Nifty Bank Index. The bank's net interest margins remain stable in Q3 while interest income gains 18% year on year. And more earnings on the radar today. Reliance Industries, Hindustan Unilever and Ultratech Cement are expected to come out with their December quarter earnings. And today on NDTV Profit, we get you top voices from the World Economic Forum Davos, where top economists and corporations are speaking about changing the landscape of business world and global economy. Hello and welcome. This is Agam Vakil. You're watching the F&O Show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. For now, we are looking at a little bit of a bounce as far as benchmarks are concerned, with both the Nifty and the Sensex advancing, currently trending in the green and by a little less than 1%. So that, of course, is the big positive here. As far as the Bank Nifty goes, that is also moving and advancing in trade as we speak, with gains coming in. The question really is that at what point in time can we expect a sharp short covering bounce? And for now, we are keeping an eye on a whole host of factors that are in fact playing in favor, but we'll continue to keep an eye on that one. But, as far as the markets are concerned, we are looking at traction. Let's take a look at what's happening really with the broader markets as well. The broader markets are also moving in tandem with the benchmarks, up around 1% for now and advancing as we speak. Well, the small cap index and the mid cap index is up and about. Even in the mid cap index, we do have good gains coming in as far as a handful of names go, which would include something like an IRFC, which is up around 6.5%. JSW Energy, which is up around 5%. Oracle Financial Services gaining another 4% right now, which is also up around 3.8%. So that's as far as the markets are concerned. Let's take a look at the futures and options space. And that's where we have traction as far as the Nifty is concerned. So we about a 1.6% increase in open interest towards what we think at the moment is looking like fresh longs. We also have traction in something like the Bank Nifty. There, while we don't have too much to speak for when it comes to open interest change, but there is the up move of 1% in its underlying. And if you consider what's happening in the options market, once again, keeping an eye on 21,000 on the lower end, on the higher end, can continue to keep a track of 21,700, because that's what's going to be in focus at the moment, isn't it? We are already above the mark of 21,600. That's where we may perhaps see about a short covering. The Bank Nifty is already seeing some strength now as we speak. So let's take a look at what's happening there. But right, so that's as far as your markets are concerned. We'll continue to give you an idea on what's really happening with the markets as far as your futures and options space goes. And but before that, let's get in the management of Home First Finance. Manoj Viswanathan, he's the MD and CEO of the company, where the company has posted what looks like a very strong quarter going in. We've also had a strong reaction at open with respect to the quarterly earnings. Manoj, good morning and thank you so much for joining in. I want to start with your assessment of the quarter gone by in terms of the kind of growth that you are seeing. Are you expecting to keep up with this run rate going into the next few quarters?
The quarter has been a good quarter, and I think the last two quarters in the year were also fairly good. So we have been targeting a 30% AUM growth year on year, and we have been delivering that now. Almost now it's 12 quarters since we listed the company. Outlook is definitely strong because we are in the affordable housing segment. Housing having, getting a good push from the government, as well as, there being strong demand on the ground. It's a segment that is continuously growing. We have a reasonable share in this segment and continue to increase share. So our outlook remains strong. We are looking to close the year with a 30% AUM growth. We are looking to close next year as well with a 30% AUM growth. And our targets are now firmly set on doubling our AUM from here on. So we are looking at a 20,000 crore AUM by FY27. So that is what we are targeting at this point.
All right. Manoj, I just want to talk about your the margin contraction here. The yields are down as much as 20 basis points in the last 2 quarters. And we've seen a little bit of an increase as far as cost of borrowing is concerned. Can you take us through these factors and how this impacts and what implications it has?
Yes, so we have been, maintaining our yields in the market, more or less. But the cost of borrowing having gone up is eating into our spreads. So which is why you see our spread having gone down to 5.3%. But this is something that we had guided the market. So we've been saying since the last 3-4 quarters that the spreads that we are enjoying at 5.7, 5.8% likely to come down to about 5.25% in the next couple of quarters, and that is just played out. So this is largely because of the cost of borrowing having gone up. Hopefully over the next few quarters, if that kind of comes down, we should be able to, at least maintain these spreads going forward.
Right. Manoj, I also want to talk a little bit more about competitive intensity and consequently the kind of impact that it can in fact have in terms of pricing. How are things panning out when it comes to home loans at this moment?
Competitive intensity has been, always there in the housing sector, and more in particular the affordable housing sector. But I think most of the players in this sector recognize that they have to, operate at certain yields to make a decent margin. So that kind of holds the rates. But having said that, our ability to earn these yields is because of our more granular distribution that we have, our better service to the customer, our strong technology, and very quick turnarounds that we provide. So that all of this allows us to command a slightly higher yield in the market, and we will hopefully be able to continue to do so.
Okay. And a final question then, Manoj, what's FY25 looking like in terms of the plans that you have with respect to expansion, and what kind of implications would it have in terms of growth?
In FY25, we are looking at increasing our distribution in some new markets like MP and UP, which are emerging as large affordable housing markets. Our mainstay so far has been western and southern markets, where we will also continue to deepen our distribution. But we are looking at some new markets as well. And with this expansion, we should be able to deliver a 30% AUM growth in FY25.
Okay. Manoj, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's numbers as well as what we can expect going forward. That's the management of Home First Finance, and the stock, of course, is up and about on account of quarterly earnings. But on that note, we shift focus back to the futures and options space, and let's get in our experts for today. We have Ruchit Jain, CMT-Lead Research Analyst at 5paisa, and Soni Patnaik, AVP at GM Financial Services, who's joining us on the show. Good morning to both of you. Soni, your view on the benchmarks. We have moved above the midday high as far as the Bank Nifty is concerned yesterday. Above that mark for now. So there is a little bit of strength returning, but I'm not sure if we can in fact call this a trigger for a short covering. The question really is, at what point in time would you in fact decide that short covering is in the works, and how are you viewing trade on the Nifty as well?
Good morning, Agam, and to all the viewers. Thank you so much for having me on the show. So speaking about Bank Nifty first, of course, we've seen some respite today, but as you've rightly pointed out, there's no such data which is indicating that there's a short covering today. As we do believe that, today being the Friday weekly closing, it is important to understand if Bank Nifty can give a closing above 46,500. So above that, there's a resistance at 47,000. So only the moment, when it's able to cross above 47,000 back again, we can say that there is a decisive short covering seen. So until then, there could be a lot of volatile movement swings happening in Bank Nifty, and one must still remain cautious, maintain a caution note as long as Bank Nifty is not able to cross and trade above 47,000. So talking about Nifty, I think Nifty, we've seen a very strong support coming in at 21,300. It's a very crucial support for the entire series. So as long as we're trading above 21,300, it may consolidate, may remain sideways from 21,500 immediate basis, from 21,500 to 21,800. Below 21,500, 21,300 will still act as a cushion for any sort of bounce back or respite that's required. The only point is that once we break 21,300 and go below, then that's a note for maintaining some sort of a cautious view. But until and unless that's not happening, I think it's not a lot of a panic for Nifty as of now. It may remain in this consolidation zone. And what's important to note is that Nifty has still not seen any aggressive short bid positions. In the last 2 days of a fall, it was just the longs that were getting covered, and there was no fresh short positions. I think there's some more respite in Nifty than in Bank Nifty.
All right. So that's the view coming in for the Nifty and the Bank Nifty. That's, of course, Soni's view on it. Ruchit, good morning to you as well. How are you assessing trade when it comes to the key benchmarks?
Hi, very good morning, Agam. So, Agam, last 3 trading sessions, the correction that we have witnessed from the all-time high is mainly because of selling from the FIIs. If you look at the cash market segment figures, then there have been net sellers around 10,000 crore on each day in last 2 trading sessions. And even in the index futures, they have formed short formations and covered some of their long positions. So 3 days ago, when the markets were at all-time high, they had about 64% long positions in the index futures. That has now come down to 49%. And this combination of short formations or long unwinding in the future segment along with selling in the cash segment is usually not a good sign for our markets. Generally, whenever you see the FIS figures, whenever they go long in the index future segment and they are simultaneously buying in the cash segment too, that is a phase where we usually see a good trended up move, what we have witnessed in last 2 or 3 months. But these figures of last 2-3 days are not much encouraging for the markets. The RSI readings technically has also given a negative crossover from the overbought zone. So I think we would see selling pressure again at higher levels in the index. The 50% retracement of this last 3 days fall is around 21,700 and 61.8% is around 21,800. So I think these are the levels where markets would again face resistance, 21,700 or 21,800, and we would again see some more downside from that levels. So I'm not very optimistic from a very short-term perspective, considering that the data has turned negative. Yes, if the data turns positive again, then we might change our view. But for now, it could be a good opportunity to lighten up the long positions around 21,700 to 21,800 range.
Okay, so that's the consensus as far as our panel currently is concerned, is that there is caution and there is no reason to go long into the markets, at least at the moment, waiting for a whole lot of cues before we can, in fact, expect a change in direction, considering the benchmarks. But on that note, we slip into a short break. But on the other side, we talk about stocks and a lot more. Stay tuned in. Welcome back. This is the F&O Show, and we now shift focus to all the stocks which are buzzing in trade, futures and options space related. So let's take a look at all the stocks which are seeing an increase in open interest, and we have Dixon Tech along with IndusInd Bank right at the top of that list, looking at weakness and shorts building in. On the other hand, Titan, Birlasoft and Bharti Airtel advancing in trade with fresh longs. And in terms of stocks which are seeing unwinding, IndiaMart Intmesh was something of an expectation since it did come up with strong earnings, and we had seen the stock decline yesterday, so we are seeing an advance here today. Oracle Financial Services advancing by another 3.5% after the whopping up move that we saw yesterday, short coverings there as well. Aarti Industries, Chambal Fertilizers also looking at decline in OI, and of course Apollo is looking at longs unwinding. That's as far as the most active stocks are concerned in today's day of trade. Let's see what our experts have to say and recommend. Soni, I come to you. I believe you have a buy on IRCTC and L&T. Can you take us through that one?
Yes, that's correct. So I think IRCTC, technically, if we look at it, has taken a good support at 935 and bounced back. There's a resistance around 980. We believe that if this resistance is taken out, it can rally up to 1010, 2090, also very good support levels and good breakout levels. Plus, it is also adding up some good long beta positions today. So this option that I have recommended is 970 call option. Although the price has moved up a bit, it's around 2021 right now. If there's any decline up to 17 and a half, we can enter in that level, keeping a stop loss of 11 and targets of 29 to 30. This is the first recommendation in IRCTC. The second recommendation is in L&T. So L&T for a very long time, there's been a good support of around 3,500, and continuously a lot of put additions were happening in the past 2 days in 3,500. So that support is held, defended even in the volatile market, and from there we've seen it bounce back and taken out the resistance of about 3,600. Which has proven out today. So it's a fresh breakout in L&T. So L&T can buy in the range of 3640 to 3630, keeping a stop loss of 3580 and targets of 3700 to 3740.
Okay, so some interesting calls coming in, one from the mid-cap space and the other one from the large-cap space. Ruchit, coming to you, I believe you have a long on ONGC?
Yes, I have a buy recommendation on ONGC. So if you look at recent price action, then technically there is a high top, high bottom structure. And even in the derivative segment, we have seen a good amount of long built up since the start of the January series. Now, in last 2-3 days, when we witness some pullback move, those long positions are still intact, not much unwinding of those longs, and prices are now crossing the previous recent swing highs again. So this is just a sign of a continuation of the uptrend. So we are expecting a good outperformance irrespective of the market volatility in the stock. One can go long for short term with stop loss below 230, expecting target somewhere around 251.
All right. Let's move on and also address what's happening with the oil marketing companies. Since Ruchit has already spoken about ONGC, I want to address what's happening with BPCL as well, because that's where we have seen some amount of an up move, and the trend looks good at the moment. It's advancing today as well as we speak, up another 1%, but on the whole it has kind of bucked the trend as far as markets go, and it has also done reasonably well in terms of how things have panned out of late. Ruchit, anything out here? I know that BPCL has made a little bit of a swift up move of late, but is there more legs to this rally?
Quite possible. The stock is coming out of a decent amount of consolidation phase where time-wise correction was seen in the entire month of December and mid-January. So I think if this continues its up move, and 483 would be the important level to watch out for, because that was the high which was made on the 6th of December, after which the stock slipped into that consolidation phase. So if the prices manage to surpass that high of 483, then I think we could see some good amount of up move in the short term itself. So as of now, if any existing positions are there, then one should continue to ride this trend. Nothing looks negative for now on the data front, but 483 would be the level to watch for momentum to kick in.
Okay, and also want to take a view on Reliance Industries with Soni here. Well, of course, we're expecting earnings as far as Reliance Industries is concerned. Soni, a lot of hands involved in trading in Reliance Industries, so perhaps a a more challenging stock to make a bet on. Still, how would you see this, and what would your view be on Reliance Industries?
So I think, Agam, last week itself, we've seen Reliance given a very strong breakout above 2650, and that holds a crucial level even as of today. On the options data, there is a lot of call writing that has happened on higher strikes, such as 2800 call, which also holds, the highest open interest on overall all across all the strike prices. So maybe there is a bit of a resistance at 2800. Only above that level, 2800, you can see some, again, a lot of short covering happening and a good one-sided move up to 2860, 2880 levels. But on the downside, there are multiple support. 2700, instantly there's a good support. Below that, 2650. So the view stands that it may hold the support of 2700 and 2650. That range is a good support. It may hold the support and bounce back towards 2800 instantly. So the moment it is able to cross above 2800, then only you can see another fresh breakout coming in. So as of now, anything lower to the dip of the support, you see any dips, I think that's where you can see a bounce back happening towards the higher end of the resistance.
Okay, that's your view on Reliance Industries. And before we conclude, just want to take a view on some of the other bigger movers, at least one of the other bigger movers as far as today's day of trade is concerned, and that's Bharti Airtel. Of course, that will also be announcing earnings a little later on, not today, but a little later on in the week. That's up and about, and it's also the biggest gainer, up as much as 2.9% as we speak. Ruchit, if you have a view on Bharti Airtel, how would you trade this?
So the view is positive, and even the data is positive. Today we have seen open interest increase of about 4.5% along with the price of move, which indicates a long formation in the stock. And even the stock is still technically holding above its 20 DMA support, which is a crucial one. So until we see any kind of reversals happening soon after the numbers, if no such kind of situation is there, then I think the stock should continue to move higher. So one can take a fresh long bet over here, but keep a stop loss below 1070, which is the support. And on the high side, one can expect targets around 1050 to 1060. Sorry, 1150 to 1160.
All right. Well, we leave it at that. That's your view coming in on Bharti Airtel. But on that note, going to take a moment to thank both our experts, Ruchit and Soni, for joining us and taking through their views on the markets and also giving us a whole list of ideas to trade around with. But with that, it's a wrap on the F&O Show, but lots more lined up on the other side. Stay tuned to NDTV Profit.